The U.S. economy fell into a technical recession in the second quarter, with data published by the Commerce Department on Thursday showing a contraction in the second 3 months of the year. Gross domestic product fell by 0.9% on an annualized basis in the second quarter, or a 0.2% fall from the previous quarter, the measure used by other major economies. That comes in the wake of first quarter gross domestic product data showing the U.S. economy shrank by 1.6%. And we have Arise business correspondent Oddiri here with us to talk about technology. We know that the Global Business Report is every Friday from 3 p.m. to 3 p.m. West African time. And it's going to be covering technology for a full hour. Can you tell us a little bit more about that?
We're just going to be focusing on technology, stocks, how they're moving, and then a lot of news in the tech sector, basically globally around the world. Yeah, that's what we're going to be doing.
So what else can we anticipate?
So exactly like what we're going to talk about. So for instance, we can start with the U.S. economy's contraction and basically how that's going to be impacting tech stocks and basically tech companies. So there's been a lot of tech companies like your Googles, your Microsofts talking about slowing down hiring because they feel that the economy is going to contract, right? And that's exactly what we're seeing right now. So tech companies in particular, when you think about the cash flows and future earnings, there are discounts that are built in. And if inflation is rising, that impacts valuations of a lot of these tech firms. So you take rising inflation, you take an economy slowing down, there's likely to be an impact on not only valuations for existing publicly traded technology firms, but also startups that need funding from venture capital firms.
So as the U.S., let's focus on the U.S. economy. Has it talked itself into a recession?
I think it has. If you look at all the firms that have been anticipating a slowing, also hiring, and just the general language coming out of a number of talking heads from various sectors, they've essentially, you can argue that they've talked the economy into a recession. The one thing that's key here, personal consumption actually grew, and that is a measure where you're looking at the consumption patterns of U.S. consumers. Retail drives a lot of the U.S. economy, and credit card use, people going out in stores to go and buy things, I think it grew by 1% in the second quarter. It grew by 1.8% in the first quarter. It was a slowdown, but that is a positive metric amid this technical recession that we're seeing in the United States.
And we'll take any of the positive that we can get in this climate, won't we?
We have to.
How is this going to be affecting the economic contraction impact of tech stocks?
Like I said, that's essentially is the valuations. It's if inflation is rising, that is going to put a pressure on valuations for tech stocks moving forward because of the forecast of future earnings, right? Mm-hmm. And also it affects how much money they can raise in their pre-seed, Series A, Series B, C, D, E funding rounds. And essentially, if you look at the language of technology firms now, the major ones saying that they're going to be slowing down hiring, you put all that together and that crystallizes into tech stocks having a bit of a challenge.
So venture capital funding for startups has definitely slowed in the US compared to last year. Why is that?
So venture capital firms, the ones that they're very early angel investors. They come in very early for a lot of these technology firms when they are early stage startups and before everybody else comes in. What they're doing is they're using publicly traded firms on the NASDAQ, for instance, which is a tech-heavy exchange where most of the tech stocks trade. They're using the performance of publicly traded companies as a marker for how these early-stage startups are going to do. So if, for instance, the three of you combine as three founders to start an e-commerce company, they would look at a Shopify or maybe an Amazon to see how they're performing to gauge what kind of funding they should give the three of you based on the metrics that are similar. So if you have a meltdown right now where tech stocks are falling and you're coming in this particular period, the three of you, to try to get venture capital funding for your e-commerce startup, then your funding is likely to be lower. So that's the reason why we've seen lower funding for these tech startups compared to last year, because of these negative headwinds that we're seeing for tech stocks.
So let's move to Shopify. Can you explain the Shopify business model?
Yeah, so what Shopify does is that they build websites for e-commerce companies.
Right.
So again, using the three of you wanted to start an e-commerce firm, Shopify would build a website for you. They also are assisting in logistics, where they are building connectivity for delivery of goods and services, or goods particularly, for these e-commerce firms.
And why are they experiencing a loss, though, in the second quarter?
So Shopify, Zoom, Amazon, all these tech companies, particularly ones that benefited from people being at home during the pandemic, they did very well.
Right.
But for Shopify, so they saw a big jump in online purchases for people who are just sitting at home and doing that. But what's happened is there's been a recovery, and this recovery again kind of falls against this doom and gloom around the U.S. economy. But more with the recovery, more people have been going out to go and make purchases, essential purchases in brick and mortar stores, which has reduced the amount of online purchases that they've made, and that coincidentally has now weighed in on Shopify's second quarter loss.
Now let's focus on Nigeria now. We understand the House of Reps has passed the startup bill. What's next?
Yeah, what's next is that the bill goes to the president to be signed into law. So the hard work. I mean, they've been working on this now since June of 2021, and essentially it's at the final stage now. So it's passed the Senate, it's passed the House. Now it goes to the president, and hopefully he signs it. It now becomes law.
So what are the key objectives of this bill?
Yeah, so the startup bill, one of the most critical focus areas for this startup bill in Nigeria is to increase engagement between tech companies and regulators. There's been a bit of a love-hate relationship between tech companies in Nigeria and the regulators, and so what they want to do is improve engagement, improve the business environments for technology firms in Nigeria, startups, and that's what the bill seeks to address.
All right, let's talk Meta. Going back to the United States, what is the FTC blocking the Meta purchase of within Unlimited?
Yeah, so Meta, the FTC, the Federal Trade Commission, is saying that essentially Meta is already a big player in the virtual reality space. Back in 2014, Meta purchased Oculus. Oculus is a virtual reality company with headsets. They are Quest headsets, which, by the way, they are increasing the price of those Quest headsets. I think about $299 or over $300. The price is going up. And they have apps that are doing very well. They are a big player already. And the FTC feels that Meta has to earn its way to increase its market share in the virtual reality space. By purchasing Within Unlimited. Within Unlimited has a fitness app, which is also in virtual reality, where you can exercise at home in his space that looks like a gym or outdoors and so on and so forth. The FTC's case is that Meta is already a big player. They're trying to buy their way to increase their market share, and they shouldn't do that. They should just earn their way with the other prior investments that they've already made in the virtual reality space.
And what was Meta's response?
Yeah, Meta's response was that the FTC's reasoning is based on speculation. It's not based on reality, and I think they're going to try to appeal it at this point.
Now, earlier, Rotus, you talked about the fact that you feel the United States has talked itself into a recession, but will it officially recognize that?
Yeah, so the United States, they've got a panel, a bunch of researchers who won't actually comment on this being an actual recession until a few months later. So that's why it's being called a technical recession. Normally, if you have 2 consecutive quarters of negative growth, they had 1.6% in the first quarter and now 0.9%. That's a recession. That's a technical recession. However, this Bureau of Researchers that the U.S. uses to review it is not just using 2 consecutive quarters of negative growth. They're going to be looking at a broader range of other economic metrics. And by the way, again, I mentioned this personal consumption. The fact that personal consumption still grew is something that they'll be looking at. So we probably won't hear an official word from them for many months. But, the markets are still going to react and so on and so forth. So that's where we are.
And react those markets do.
They will.
Thank you so much, as always, Rotus, for coming in to explain all these business updates for us. And just so that you remember Rotus's show, will you remind us what time?
Yeah, so 3 p.m. I mean, the Global Business Report is 11 a.m. and 3 o'clock every weekday. But Fridays at 3 o'clock, we focus particularly on technology. So everybody tune in.
All right.